Thank you, Colin.
Thank you.
And thanks to HKTDC as well for being with us today.
Thanks, Rachel.
Yeah, let me just see. Should all be able to see the presentation.
All right, guys. So the nuts and bolts, okay, guys, okay, of how to set up in Hong Kong, and then maybe Shenzhen, and then some touching on Macau. But please remember, like I said, my presentation and the first one, there's a tactical thing, right? So this whole thing is like, how do you use Hong Kong? Because trust me, Chinese entrepreneurs are using Hong Kong, and you need to know how to use it, okay? As SMEs as well. Right.
All right, I will start very quickly just to give you, there we go, like a few words about Hawksford, so who we are and what we do. We are a global corporate service provider. We also provide private client and fund services, but that's not the topic of today. Right now, we are present in more than 20 markets, and we assist a total client portfolio of more than 4,000 clients. There's more than 650 of us across the world, and we are fluent in client languages, so obviously English and Mandarin. It happens that I asked my Hong Kong-based colleague Guilherme, who's a Portuguese native speaker, to join the call as well. As I understand, there is interest also in Macau and not only Hong Kong, the topic of today. So there's no slides directly on Macau, but when I speak about Hong Kong, I will keep drawing the parallel between how that topic or issue works in Macau. Yeah, Guilherme is there in case there's somebody who wants to speak directly in Portuguese later on.
So Guilherme is in your office?
Yeah, he's Hong Kong based and has been he's expert in Hong Kong and mainland China as well, but is a Portuguese qualified lawyer and works with us in Hong Kong based right now. So give you a glance of where we are in the world right now. Obviously, we see China, but we have a presence with 5 different offices in mainland China. Shanghai, Beijing, Guangzhou, Shenzhen, and Changshu, on top of Hong Kong and the Singapore office. That's our Far East Asia footprint. What is it that we do? I can actually skip this slide. I'm going to talk more about the services later. And just to give you an idea, a few of the companies that we are assisting in the greater China market, so Hong Kong and China, the two markets are ever more sold together or approached together. Companies just don't go in Hong Kong to stay in Hong Kong. They use Hong Kong as the springboard to go to mainland China. That is true also for what we assist in our profession. And the fact that we are present extensively on both sides of the border, so in the special administrative region of Hong Kong and Macau and mainland China, helps with a lot with all the cross-border interaction between the two markets. And I will give you a practical example of this interaction later on while we go through our presentation. Okay, let's start with Hong Kong corporate and tax overview. I'll give you a Hong Kong 101 introduction on these sort of things, and I'll draw the parallel with Macau. First of all, why Hong Kong? If you want to access Asia, obviously, but China more in particular. So as a special administrative region of mainland China, Hong Kong has been granted specific commercial, legal, and tax advantages that no other market in the world enjoys. So it's really the ideal place to invest into the mainland of China. We have a CPA, which is the Closer Economic Partnership Agreement. It's let's call it an international tax agreement between Hong Kong and China. I just give you an example of what this means. There are professions and qualifications in Hong Kong that are automatically recognized in China. Notarization processes are streamlined and simplified, especially if you have to update anything related to your China business. You don't have to go, I'll give an example in the UK, to the notary and then the High Court to apostille the document and then the Chinese consulate to have it translated. This takes more than a month in any European country and costs a lot of money. In Hong Kong, you just go to the notary. The notary holds a specific qualification, which is called CAAO, China Authorized Attesting Officer, which means that the simple act of a notary in Hong Kong is automatically valid into China. This makes the management from a corporate point of view of your investment or activities in China much easier. On top of that, there are reduced tax rates when it comes to profit repatriation from China to the outside. I give you one example as we have a specific slides later on. Whenever there is a dividend to be paid out from a Chinese entity to the mother company or to the investor, the shareholder, China will normally apply a 10% withholding tax on that dividend payout. when the recipient of the dividend instead is a Hong Kong subject, let's say a company, provided that the company has economic substance in Hong Kong, that withholding tax will be cut by 50%. So it's only 5% withholding on the dividends. An obvious advantage from a tax point of view. Well, Hong Kong is part of an extended range of DTA networks. It's more than 50 as of today. We are a common law jurisdiction, so it's something where to which foreign businesses are more familiar and feel comfortable with, because it's easier, understandable, and very business friendly. So Hong Kong is the place where you typically strike your JV or shareholder agreement with the local partners, as you have quick judgments, quick and understandable judgments. And then there is a free flow of capital. So we are not subject to the restrictions. We're going to see them later on, to which China's investment are subject. So just make it easy to move money around and be flexible and adjust to the needs of the business. Okay, so you decided to set up a company in Hong Kong. What is it that you need? First of all, you need a name. And we can verify live if the name is available or not. There are no minimum capital requirements in Hong Kong. So you can set up a company with as low as $1 Hong Kong dollar. Typically, the common market practice is 10,000 Hong Kong dollar. And the same in Macau. You will have Macau Pataka, just the local currency there, but similar. No minimum capital requirements in both jurisdictions. You don't need a business scope, which means that the company will not be constricted by certain predefined activities, which are your intended business at the beginning. Today, the company can be selling computer spare parts, and tomorrow the company can be providing marketing services. It's okay. At the statutory level, I don't have to change anything. We'll see that in China it's not like that. So again, greater business flexibility. You need a registered address, but you don't need your own independent physical office. The company can be registered at your company secretary, for example, and then you can open up your own physical office later on. The same is true also in Macau. Typically, companies are registered at their company secretary. Shareholders can be local or foreign. There is no requirement to have a local partner. And the same is true also in Macau. The company can be 100% foreign owned by individuals or corporations. When it comes to directorship, same is true also in Hong Kong and Macau. No need to have a locally resident director. So you living overseas can be appointed as director of the company as an individual. Macau works the same. I would say the advantage in both jurisdictions to have a locally resident director is that if the business of the company grows and you need to have somebody there to sign off or go attend meetings with the bank and so forth, obviously having somebody on the ground itself from an operational point of view. But from a legal standpoint, that is not necessary. There is the need for some statutory roles to be covered by local service providers, qualified local service provider like us. So typically, if you want to, you need a locally appointed qualified company secretary, and you need a designated representative and a tax representative. These three roles are not mandatory in Macau, because Macau is not common. These are roles typically from common law jurisdiction. So those of you who have a business here in the UK, you will have a company secretary appointed. It's exactly the same in Hong Kong. In Macau, because it's more of a civil law tradition, we don't have these roles. However, your CPA or the accountant provider where your company is registered will be able still to prepare board resolution or whatever type of corporate documents you need. But the role, company secretary, formally speaking, you don't need that in a Macau limited company. The life of a company in Hong Kong, and pretty much the same in Macau. You need to have at least one board meeting per year to approve the financial statements. This is a best practice in Macau. It's not a must, but obviously we suggest to have the board meeting once a year. You need to file changes at the company registry in Hong Kong within certain deadlines. If you increase capital, if you change director, the same is true in Macau. Hong Kong is a bit more advanced in the filing of these documents because everything can be signed electronically. Again, very easy. Then you don't need to have couriers going around with wet ink signatures, which is not the case, unfortunately, in China. Macau is kind of in the middle. Some things can be filed electronically. Some others you still need the wet ink signature for documents to be filed with the local bureaus and authorities. Tax filing. You need to file two returns in Hong Kong. One is called profit tax return and employer return. You have the same obligation in Macau, although they are named differently. The tax return is called M1 and the employer return is called M3/M4, but similar requirement. So one, you file the profit of the tax. For the employer return instead, you're basically summarizing every amount you've paid in the previous 12 months to your employees, director, or individual consultants. There are monthly MPF. So MPF is the pension scheme in Hong Kong to be paid monthly. In Macau, this obligation is quarterly based instead, but similar in very minimum social insurance calculation and contributions. You need to audit your financial statements in Hong Kong. This is mandatory, no matter the size or even if the company has no business. You have to audit financial statements to be filed together with the tax return. In Macau, we had to make a distinction. It basically depends on the size of business of the company. If the company has a registered capital of more than 1 million Macau Pataka and has had a taxable profit of 500,000 Macau Pataka in the previous 3 years, you need to prepare audited financial statements and file them. If you are below these thresholds, then Macau will not require you to even file financial statements, but they will assess you on a deemed profit basis, depending on the industry in which you fall. So Macau, you need to have this distinction. Yearly renewals, the same, you need to file the NER1, which is the renewal of the company particulars, is what in the UK is called the confirmation statement with the company's house in UK. Same difference with the NER1. And you need to renew your business registration once a year. Simpler in Macau from this point of view. Now you only need to file the M1 once a year, whereas the business registration remains unchanged unless you need to change, you update the company record or change the director, and then you need to file a new one. So it's not a recurrent obligation, just like in Hong Kong. Tax. So no VAT in Macau and Hong Kong. Profit tax, Hong Kong, we have the two-tiered tax rate, as Rachel mentioned before, right? 8.25 on the first 2 million of profits and 16.5 on any amount above that, which means if my company has a profit before tax for any given financial year of, let's say, 5 million Hong Kong dollars, 2 will be taxed at 8.25, and the remaining 3 will be taxed at 16.5. In Macau, a bit different. The first 600,000 Macau Pataka of profit are not taxed, are tax exempted. Any amount above that is taxed at a flat rate of 12%. So if you made the average between the two, it's fairly similar. No custom duties in Hong Kong, and so in Macau as well. No capital gains in both jurisdictions. And then Hong Kong, when it comes to foreign source income exemption and the global minimum tax regime is more advanced than Macau, I would say, because of its preeminent financial status. So we have already adopted this global tax regulation and guidelines in Hong Kong. Macau is not so much advanced because it's a more local jurisdiction and focus on specific industries such as entertainment, gambling, and services. I want to talk to you briefly about this foreign source income regime because it's quite relevant if you structure your business with a Hong Kong holding company and a Chinese subsidiaries. So basically, I want to focus on this slide. Until a few years ago, if you have a PRC subsidiary paying a dividend into Hong Kong, when that dividend is received on the Hong Kong company, that dividend will be automatically exempted from taxation in Hong Kong because it's foreign source passive income. The same was true if you receive a royalty or a patent fee or an interest. Starting from 2023, this automatic exemption from tax from, again, foreign sourced passive income, such as the dividend that the WOFE would pay to its Hong Kong mother company, is not automatically exempted anymore. There are certain tests that the Hong Kong recipient company needs to satisfy in order to enjoy the exemption. So it's not automatically, you have to fulfill the test. What are the requirements? An economic substance requirement, which means you need to have staff and a physical office in Hong Kong, or a qualified local service provider, which invests resources and time in the management of the company if you have an external assistance in that regard, and this will satisfy the economic substance requirement for the dividend, or a participation exemption, which means that the Hong Kong company will still enjoy exemption on tax on that dividend, provided that it has held the shares of the payer, that is the Chinese company that pays up the dividend, for not less than 12 months. So if it's a shorter, if you just acquire a PRC company, don't distribute dividend right away. Wait for at least 1 year so you can actually be able to enjoy the exemption. Okay, it's very relevant because again, for the type of clients that Colin assists and so forth, the end game will be that China becomes a profitable business and then distribute the dividend up. So you need to be aware of this changing regime, which is a major changing regime, which happened a couple of years ago.
Oh, what if IP is held in Hong Kong and there's a fee charged? That becomes a reason,
Yeah, so
we get the money out.
So the IP income would only be exempted in Hong Kong if there is the nexus requirement. If there are basically 5 different type of foreign source income received in Hong Kong. We discussed about dividend or interest, and you see there are 3 different type of exception. According to the nature of the passive income received in Hong Kong, you will be able to qualify for the exemption according to the case, right? So this matrix is kind of helpful. If you have an IP income, the big difference I want to underline on the IP income, this is related to patent and design, okay? It's not about trademark. So if Hong Kong holds a trademark rights and receive the royalty for the trademark, that is taxed 100%, no exception. If instead it's for a different type of IP, such as a patent, okay, you can get the exemption if you fulfill the nexus requirement. Why they gave this privileged treatment to patent? Because Hong Kong historically has not been a place for research and development where a company would invest heavily and then register patent there. We were big on trademark. The government a few years ago took the decision to radically change this. We want to become a center for research and development. So we are giving, from a taxation point of view, incentives to research and development. Not only an exemption, then once the patent is registered in Hong Kong and licensed around the world, and Hong Kong receives those IP income, but also from the cost side, if the cost incurred in Hong Kong by the Hong Kong entity on research and development are qualified as cost, you will enjoy a 300% deduction on the cost. So if you spend 100 in qualified research and development in Hong Kong, you may be able to deduct 300 in your tax return. And there's a whole additional array of measures. Now, we will have to be more specific and look at what type of cost or what type of IP you want to place in Hong Kong. But the overall message and the trend is that patent is becoming a trend in Hong Kong, and let's say, and a highly encouraged from a taxation point of view trend.
Can I just ask a question on that?
Yes, please.
It's just, we're just about to have a patent granted in mainland China, but we were thinking of setting up an entity in Hong Kong to manage the license fees from that. Would that qualify for this exemption, or would that be?
Who's the holder? Who registered? Who's the registered holder of the patent?
The UK company holds the patent, but it's a Chinese patent.
So the UK company has registered the patent in the patent office of mainland China, am I right? And then it's licensing it out to local counterparties, am I right?
That's it.
Okay. In this case, no, because the Hong Kong company will only be, let's say, like a collector on behalf of the UK company. And I understand why that would be advantageous, because even the proximity and the banking system, it's easier to send money out of China to Hong Kong rather than maybe to the UK, because the banks are more familiar to the type of transactions. Am I right?
Yeah, that's one of the reasons.
Yeah, but if the Hong Kong company is not the patent holder, it will not be able to enjoy let's say the preferred treatment which we just described. That will be my understanding.
So how can we fix it?
You need to have the Hong Kong company to be the one incurring the cost for the patent development and registration.
Okay.
Then there are certain measures by which, if you transfer the patent the patent rights, so if the UK company sells them pretty much to the Hong Kong entity, you might be able to then start to enjoy some of these exemptions and preferential treatments. We would have to assess the case more in depth, obviously, but you need to have the Hong Kong company to be the holder of the patent. It cannot be the UK and Hong Kong just being authorized to be the collector. I don't think that will allow you to enjoy the special treatment, the preferential treatment.
Francesca, is there any like upside, to doing all this stuff, routing it through Hong Kong, right? Do they save more money, pay less taxes? Is it easier to get money out there?
It's easy. It's definitely easier to have bank outward remittances from China to Hong Kong than to other countries in the world.
Can you explain why? I think this is very important for all of us, including myself. Okay, like in what way?
First of all, if there is let's say a cultural or business knowledge element. So Chinese Hong Kong banks it's very routine to receive funds from China. So they require less checks, less documentation when the money comes out. China, on the other hand, sees Hong Kong as, again, the springboard to go global, as the gateway in and out of China. So they encourage and facilitate the rules. The main authority for cross-border remittances in China is called SAFE, State Administration of Foreign Exchange, which is a very powerful authority because it's the one that gives you the approval for sending money out of China, and even checks and approve the exchange rate against the renminbi of any transaction that comes into China. And when they see this having Hong Kong in between, right, being the recipient or the payer, this is also, let's say, a policy that China has implemented. It's easier and faster. Whereas if there is overseas, there can be complications, the routing. There's also banking technical details, but yeah, this is pretty much what.
So put it this way, as you know, all of these are UK, Europe, whatever, some Africa, whatever, Latin America companies. If they just right now, tomorrow, set up only in China, right? It'd be harder to get the money.
It will be. Yeah, hard. It's not impossible. Obviously, there are transactions also with China transacts billion of times every day with the whole world, but it will be more complicated and more time consuming. So Hong Kong will be faster. And again, yeah, better for the business also.
So Hawksford facilitates this sort of thing?
We facilitate in the sense that because we have offices and multi-year expertise on both sides of the border, when there is a client that needs to inject capital into China through Hong Kong, buy from the Hong Kong investor, or on the other hand, the remittance from China to outside, we control both sides of the transaction in assisting the client on both sides. So the transaction is easier. We know what's required, so we can prepare the client in advance. I'll give you a practical example. If the PRC company needs to pay a service fee to an overseas recipient, you need to translate documents in Chinese and submit them to the tax bureau in China. Otherwise, it will not release the payment out. This is something that, it's a petty issue, but if you're in a rush and you say, hey, here's the invoice, pay it. No, it's not in Chinese. Where is the contract? Oh, there is no contract. We need to draft one because the tax bureau will need to assess the nature of the transactions at hand and confirm the withholding tax rate. This is for service fee payments from China to outside. And then assess, again, the deemed tax profit rate and apply the relevant withholding tax. And if you don't do these steps, the bank will not allow the money to leave. And then, again, the process with SAFE will be much more complicated.
Thanks.
Please continue. All right, I go on. Let's see.
Maybe I should ask also. So what if they want to do business in Macau via Hong Kong and stuff?
Okay, Macau.
So you Hong Kong and Macau.
Hong Kong and Macau seamless. Macau has no restrictions on the transaction. It's pretty much same as Hong Kong from that point of view. So free transaction. Obviously, Hong Kong is a financial center. Macau is not, even though they are stepping up measures to diversify a bit more the local economy. The number of banks in Macau is not as wide, and the financial services you can find in Macau are not as rich or as many as you have in Hong Kong. But potentially from a Macau bank perspective, the free flow in and out is the same as Hong Kong. Because Macau banks are less and more local, they may have less partnership with overseas bank. So if Macau pays to the UK, it could be that I have no interest in any bank, but just give you a name, Banco Ultramarino, which is one of the major banks in Macau. It may not have a direct relationship with the banks of your counterparty. So the payment might need to go through an intermediary bank, and it might get stuck or it may be longer. Whereas Hong Kong, all the major banks are there. There's direct relationship among these, and so it's faster and better.
I see.
Yeah.
Let's continue.
Thank you. So these slides, again, from a tax point of view, which I was anticipating in my first slide, some of the major advantages of controlling your China investment through Hong Kong. Here I put the unique preferential tax rates that Hong Kong enjoy vis-a-vis China. So on dividends, as I mentioned earlier, 5% and not 10%. On interest, 7% and not 10% withholding tax. And royalties the same, 7% and not 10%. Okay, this is the key, I would say. On dividends is obvious, you save 50% in tax. Especially if the business become successful, it will be substantial saving and efficiency. Yeah. So I mean, is it?
So basically net.
Yeah, absolutely.
Net, we save.
Yeah.
Going to Hong Kong to
Correct.
net.
Yeah. With the note I mentioned before that then in Hong Kong, it's not that dividend is not automatically exempted, but you need to fulfill some of at least one of those two exceptions I mentioned before.
One of the questions of the registrants was like costs, right? Okay, so like there's some fixed costs for maintenance. I wondered whether the net.
Yeah, so I can give you like our fees as an example. So typically our fees for setting up and maintaining the Hong Kong company, we will have a one-off fee the first year just to help with the setup and bank account opening costs. And we will give you a company which is fully operational and with a bank account for you. I hand over the keys to you, ready to use the company. In this one, I talk in pounds, so it's more understandable for everybody. We are going to be around, I would say, £1,400 more or less for the setup, full setup, company ready to work. No hidden fees, government fees are included in there.
And
it's the whole cost.
But no banking yet, right?
With bank account. With our assistance for bank account opening. Right.
Okay.
So we will basically manage all the paperwork that the banks require, either a digital bank or the old style traditional bank to have the account open.
Well, just to let you know, everybody, we are working with the HSBC. Like we got a little secret thing with the.
If you have, that's very good.
I know, right?
That's a huge added value.
Yeah, it's very difficult.
Yeah, HSBC, the banks in Hong Kong have become more conservative given the overall, geopolitical situation. And then there is a maintenance fees. So that will be our appointment in the mandatory roles for the setup, the company secretary, the register address, the tax representative. So we acting as your tax agent to file the tax returns I mentioned before, and the designated representative. That's a fairly new role, mandatory, which you need a license to carry out. We do have a license there, the Trust and Corporate Service Provider license. It's for anti-money laundering and the UBO registers. All in all, the maintenance of the company would be about 2,000 British pounds per year, more or less. So the first year is a bit higher because you have the setup cost, but then after that, it's about 2,000 to maintain the company.
So inclusive of first year.
Correct. First year is a bit more expensive because you have the setup, but then every year after that, we're about 2,000 pounds per year. Yeah. Okay. Just to give you a glance, Hong Kong, this is 2023, but the proportion are pretty much unchanged up to 2025. Hong Kong is still the major investor into mainland China, either because Hong Kong businesses directly invest there or because foreign businesses come to Hong Kong and then from Hong Kong they invest into China. So we still hold the majority of we are still the source of the investment in the PRC. I will stop just on the first slide of this one, unless somebody after the first slide has specific questions on any of this type of visa. This is just a panoramic of the visa option available to you in Hong Kong. We have traditional employment and investment visa. For employment, basic requirements will be best if the applicant holds university or another high qualification degree. And the key thing there is to demonstrate that there is no comparable professional profile available on the local workforce. So that's why I need to hire foreigners. But the visa application in Hong Kong, compared to many other jurisdictions that I have direct experience with, Japan, Korea, Singapore, and mainland China, is one of the most understandable and fastest and transparent. Investment visa, obviously come and start your own business. You need a company here on which you need to be the owner. Here, the key question to answer to the immigration department is, how will the business contribute to the Hong Kong economy as a whole? And this question is normally answered by proving two items. First, that you will have a physical location, so not just a company registered at our address. You can start with a hot desk in a WeWork or this sort of co-working spaces, and then that you create employment for local workforce. So, or hiring or commit to hire in a short period of time after the application is filed for local workforce. Okay. Once you have either of these two elements, or if better both, I would say on a general level, an application will be successful. If not, and you need to commit, and you say, I start the business, and then within the next 12 months, I will get an office and I will hire 2 people. All right. Chances are, if the application is well prepared, that the visa will be granted. But then after 1 year, when you have to renew it, the immigration authority will check. Okay, last year you said you would do this, this, and this. So where are you on your business plan? So don't overshoot, basically. Don't overcommit. We have a specific quality migrant admission scheme. This is quota-based, depending on the specific needs of Hong Kong as an economy set by the government. Training visa, obviously, if you want young workforce to come there and experience, then come back to the home headquarters. That's an option for young people. Dependent visa, so any of the visas we mentioned there, the partner, the kids, or can also come along with dependent visas. So a family can move quite easily, and all the visas can be applied at the same time. And then permanent residence. This is a very tangible proof that Hong Kong is an open place to business worldwide. You can acquire permanent residency status even as a foreigner in Hong Kong after 7 years of continuous employment in Hong Kong. So either of the visas that are mentioned there, if you have them for a continuous period of 7 years, you then become eligible to obtain a permanent residency in Hong Kong. So a Hong Kong permanent ID card.
Does that, like, say you're employed by your company?
Can also.
That counts.
Yes. So as an investor, you have 7 years of investment visa. Yeah, you qualify. Or even a mix. Maybe you start as employment hired by a Hong Kong company. After 2 years, okay, I can set up my own business because I want to try myself. Okay, so 2 years there, 5 years as investment. Sure, it also works.
Got a quick question from Renata here.
Yes.
Renata is a UK company. She's moving to Macau to Hong Kong, actually. So I'll loop you guys in the same, community. Renata is asking, there's a patent box in UK as well. Would co-ownership with Hong Kong IP help to have patent box in Hong Kong as well?
There is a regime of patent box in Hong Kong, yes. So again, as part of that drive of Hong Kong to not be the place just where you put your IP and just sit in there, but as a center of research and development to attract research and development, yes, there is a patent box.
Maybe explain what is patent box, as such.
So basically, I would say in a nutshell, it's kind of technical, but in a nutshell is a preferential tax regime and framework to which company can apply if you have the patent box. So there are an array of measures, but basically it's a preferential tax treatment to companies that want to register the patent there. It will give tax breaks, it will give extra deductions to cost incurred into the realization, the generation of the patent.
I see. Renata, does that answer your question? If so, just shout out loud, okay?
If she wants to leave, I guess we have her email address. Renata, I'll be happy to share more details with you, like go more into the technicality of the patent box regime. It's often updated. I wouldn't be surprised if in a few weeks of time, when we have our budget, so the financial secretary in Hong Kong will release the measures that will be further update. It's updated almost every year since they first started, just again because they want to keep attracting the research and development businesses in Hong Kong.
That's very interesting. In fact, Francesco, and I'll share with you, my friend, and all of you here, I guess. There's something interesting that's happening, guys. Invest Hong Kong government just got a few months ago a KPI. Alpha shared this at the UK Investment Forum just last month, so no secret that. Starting September, meaning now, okay, there is a KPI by central government China to bring Chinese companies out into the world and through Hong Kong. So I wonder what the budget's going to be, coming up, but no doubt it'll be something, I think, to do with making this a bit easier or something. I don't know. Okay.
One visa that is not mentioned here but it's quite unique again. Is this one, Top Talent Pass Scheme.
Yes.
This has been introduced more or less 2 years ago, I think. The government's announced it in early 2023. This is what the major immigration tool to attract back talent in Hong Kong after, you know, the painful COVID years that we all had to endure, and actually makes it easier for businesses. Actually, sorry, not for businesses, for people, for individuals to come in Hong Kong. What are the key advantages? First one, you do not need a sponsoring company. So in employment, you need the local company to sponsor your visa application. For this one, you don't need. As an individual, as a professional, as an entrepreneur, if you fulfill the requirement in either of the categories mentioned there, so A, if you have an annual income in the 12 months, in the year preceding the application from the Top Talent Pass Scheme of more than 2.5 million Hong Kong dollars, that's 250,000 British pounds, give or take, you would get this visa. If you are a graduated from one of the world's top universities, and the list now is almost 200 universities long, last time I checked, 21 are from the UK. So if you hold a full-time degree from one of those 21 UK universities or from any other of the almost 200 in the list, you would be, and you have 3 to 5 years working experience after obtaining the full-time degree, either a bachelor or a master's degree, you will be given a Top Talent Pass Scheme, which means you can come and live in Hong Kong. You don't need to have an employment. You just come, you can open your own company and be an entrepreneur. And after 2 years, this visa is not renewable, 2 or 3 years, then you switch. You either go as employment, or maybe in the meantime, you have to start your own business in Hong Kong, but this visa is much easier to get than the investment visa that we saw before. And then you switch to investment visa. But at that point, your business is 2 years old. You already have an office, most likely. You already have a sizable business, so it's much easier to fulfill the requirement of the investment visa. Okay, and again, on the pathway to the permanent residency, the 2 or 3 years obtained under the Top Talent Pass Scheme, they count. Okay, this one, as long as you show you have a university certificate and the 3 to 5 years experience, you get it.
Easy.
You get it, yes, easy. If you fulfill those two very objective criteria, you don't need to demonstrate that your position is not available, is not easy findable on the local market, nothing like that. Black and white paper, that's it, you get the visa. Quite unique, quite unique. Okay, I switch to mainland China now. So we have done our Hong Kong part of the business. We are ready to take the great leap forward and go into mainland China. What entities, what type of corporate vehicles are available into mainland China? Obviously, there can be the WOFI, which is a fancy word for a limited company, but it's a wholly foreign-owned limited company, rep office, JV, or branch. Let's focus on the first one, which is by far the most used one. Obviously, it's a limited liability company, just like the limited company I described before in Hong Kong and Macau, the same. You have a registered capital. You need a business scope here. So unlike Hong Kong and Macau, where you can be doing the trading of electronics and later on the services, here, you define a business scope when you register the company. If you deviate or you want to add activities to that business scope, you need to file an application with the State Administration for Market Regulation and update. So it's not so easy to switch. It's harder to steer a bit the business in China. Minimum capital. Now, in 2014, China dropped the minimum capital requirement. In the past, there were fixed minimum capital. Now you don't have a minimum capital requirement anymore, but the local authorities, when you register the WOFI, they will assess your business scope. What is it that you're going to do? Oh, I'm going to provide marketing services. Okay, you don't need a lot of capital. If you put down 50,000, 100,000 RMB, it's okay.
Quick question. When you say local authorities, what do you mean by that?
I mean depending on the city or the county where you register, it will be the State Administration for Market Regulation.
Got it.
Okay. Yeah. Which is the one where the company, again, imagine the company's house that you have in UK or the company registered in Hong Kong.
Sure.
They will assess your capital requirements based on your proposed business scope and proposed business activity. So it varies. shareholders, one or more, is branch enough to work with board contracts, for example? I will get to that question just in a moment, just to finish here. You need to do, you can have, obviously, shareholders can be foreigner. Actually, in a WOFI, by definition, shareholders are 100% foreigners. Individual or corporations is the same. You need to do annual audit and annual reporting, same as so certain difference is pretty much the same that you have to do in Hong Kong, and you can hire staff directly. So branches, yes, you can do those activities in replying to the question of the user. However, by my experience, and again, I've been in the industry for more than 14 years now, with direct exposure in China, as I worked in our Shanghai office for 3 years in the past. Branches are a very rare animal in mainland China. You will have a harder time, even though legally you would have a harder time signing contracts, engaging with counterparties.
Okay.
Because it's not common to run into branches. It's either WOFIs, which is a limited company, or rep office. Rep office, very limited scope. Again, not used almost anymore.
Okay.
WOFI by far has 95% or more of the market in terms of vehicles structured to use to enter the China market.
Gabriel, I hope that answers your question about branching after work government contracts. Yeah.
I wouldn't do a branch.
Yeah.
No.
Try to make things less weird as possible.
Yeah. Branch will be a dead end.
Yeah. But guys, quick one. I might also, like, if you want to enter certain places like Qingdao, whatever, I mean, Keith. So I would probably know the local authorities to help facilitate the kind of small company setup, and so that kind of thing helps, because administratively, as long as like the rule of thumb for China is that as long as administratively you're okay, it should be okay. Now it's just a case of skipping the queue, okay, right? Okay, and so that's what I'm here for, or TUS is here for. Okay, but yeah, try not to do weird stuff. Too weird.
Okay, so WOFI, as we said again, wholly foreign-owned enterprise, can receive revenue and issue and hire staff locally. They can repatriate dividend back as a limited company. Okay, can do pretty much everything that a limited company can do in the UK or that you're more familiar.
So it can repatriate, huh?
Yes, absolutely. Yes. Yeah. There is a process which is not so easy, but yeah, you can repatriate.
Okay.
Now, we talked about registered capital before, and we saw how in Macau and Hong Kong, pretty much this is completely free. You can start up with $1 Hong Kong, 1 Macau pataka. And we mentioned in the previous slide that although there is no minimum requirements in China, as a matter of fact, the authority will assess your business plan, and according to that, and confirm whether or not your committed capital is, let's say, correct to your business scope. Now, there is a concept in China which is important, which is the difference between the total investment and the registered capital. Now, in Hong Kong, if the company needs, let's just say, £1 million to run in the first year, as a shareholder, how do I provide that finance to the company? I will set £1 as capital, and the other 900,099 I will give as a loan. Okay. This gives me greater flexibility because there's not too much capital stuck in there as registered capital and committed for the long term. I can get back the loan right away. Maybe I can even charge an interest, so even make some gain on that. In China, you don't have this freedom. There are proportions between, if 100 is my total investment, then out of those 100 as total investment, 70 must be committed in capital and 30 as loan. And then as the total amount of capital overall increase, you see more than $3 million, then the proportion shifts and you can do 50-50 instead of 70-30 or even 40 and 60. Okay, but those are, more than $10 million, honestly speaking. This is manufacturing or very heavy trading business. Okay, for small, medium-sized enterprises, we are always in the first line. So 70 as minimum registered capital and 30% as the part that you can give as a loan. Okay. Capital, a very important point here, because this is a reform passed by China last year, effective from July. you must pay the capital that you have committed to inject within 5 years from the formation of the company. In the past, they were giving you 10, even 30 years. People have abused that, honestly speaking. So people were overshooting, registering very high capital so that they were fulfilling the requirement to participate in public bid or big public contracts, right? But then they were not paying the capital and they were just running away with the money, pretty much. So the government has changed it and has reduced the deadline for paying the capital to 5 years. So you need to pay in the capital through a special application. Again, the state administration of foreign exchange. Really to register your foreign direct investment through there.
And that's different from the UK, right? Because UK you don't really have to pay it.
But it's regarded as paid.
Yeah.
I would say same as in Hong Kong. No, in China it's regarded as paid for 5 years, but after 5 years it has to be really paid. Otherwise, the company will go into all sort of legal and of legal trouble. You don't want to do that.
Yes.
Yeah, that was the key point here. Okay, governance. We saw in Hong Kong and Macau, directors, shareholders, and in Hong Kong, the ComSec. You don't even need that in Macau. In China, it's more articulated. Obviously, we have shareholders. We have a legal rep. This is a key role and a very critical role. This is the role that has the legal representation of the company, and is also the one that represents the company in legal proceedings, in trials and everything. So you do want to have somebody covering this position that you trust fully in order to avoid, because the legal rep is an all-powerful and on the other side also all-liable role in the company. You can have a board. You don't need to, so there can be only one director as well. If you want to have a board, then you need to have at least 3 people. So if a board exists, it cannot be less than 3 directors. You cannot have 2, because otherwise potentially there is a risk of being stuck with 1 against 1 and no rule of thumb to decide how to exit the impasse. Managers, those are again elective. It's not a must. Supervisor or audit committee. Once again, you don't need to. The reform in 2025 took away the obligation to have a supervisor. You don't need that. You can have it as a best practice. And those in the supervisory role are the ones who don't actively engage in the management of the company. They just oversee the legal rep of the board of directors as they act and make sure they take action and decisions in accordance to the shareholders and in respect of the law. And then you need to have a financial responsible person. This is similar to the tax representative role we discussed before in China. So it's the point of contact with the local tax authorities, the one that files the tax returns, that explains in case you have a tax audit and so forth. Normally, we do provide role coverage for this role as well, for the financial responsible person. Register address. So in Macau and Hong Kong, we saw you don't need to have your own independent office. You can be registered at the company secretary or your service provider there. In China, it's not like that. When you set up a company, you need to secure an independent address from the very beginning. Otherwise, the company does not get registered. And you need to make sure that the address, the office space that you have found, there is not a pre-existing registration of another company who may have just left without doing the appropriate deregistration from that location. I saw troubles happening many times. So when you find your real estate agent that finds an address for you, the check, if he's reliable and good, he will run this check. And if he doesn't, then you will not be able to register the company. Because when you file the company registration application at the local authorities bureaus, they will say, this address on our record is already taken by this other company, so you cannot register here. But maybe in the meantime, you've already signed a pre-leasing agreement, and you've paid the deposit. So you're losing money, you're in all sorts of trouble. Very, very important in the WUFI registration process. Co-working spaces are fine as long as, again, in their business license, they have the provision of being able to rent the space, subdivided into smaller offices to multiple counterparties. So again, have a check at I would always ask for the business license of the co-working space that is offering me as the office to make sure that they can actually do that. Company name, there are some rules to follow when you select a company name in China. In Hong Kong and Macau, you only have to put LTD at the end. That's the only requirement from government. In China, you also need to have the location, so typically the city name, Shenzhen, Shanghai, Beijing, Guangzhou, etc. And then you need to put some couple of words that will say overall define the business of the company. So, for example, Hawksford, for example, we are Hawksford, Shanghai Business Consulting, or trading company, or engineering services. You need to have a couple of words that define your main business scope. And then for your company name, here I open a topic which is goes into the literature almost, or the culture. You can select characters, Chinese characters that are either sounding similar to the original name. So for Hawksford, for example, we are called Hankefu, which is kind of similar to Hawksford, or completely different names, but whose meaning, again, are of good auspice, or that give an idea of what the main business of the company is. McDonald's in the past, now they changed their name. There was a golden arches, so they put the word gold into the name again, just because it's of good goodwill. And there are companies which are marketing companies which are specialized in drafting the name. The whole art behind it. A bank account. Every woofie must have 2 bank accounts. This is a must, not less than 2. One is a renminbi basic account, and the other is the capital account. The capital account is specifically for receiving the payment of the capital from the foreign investor. If one of your clients pays you on the capital account because you give them the wrong bank account by mistake, the money will go back. Or if you receive a payment from overseas other than from your investor on the capital account, the money will get stuck, and then SAFE after a few days will send it back. So this is a very special account. RMB basic account instead is for the everyday transactions in and out. On top of the RMB basic account, if you want, you can open multiple other accounts in foreign currencies. Major Chinese banks all provide that service, but you cannot do without these two. These two are a must for Chinese woofies. Company seals, key topic. Now, in Hong Kong and Macau, we have company seals, but they're not special. I don't know how many of you are familiar with Hong Kong. You go to the Shenzhen market, there are small stalls. I tell them, I want a company seal that says this much. I go there at 10 a.m. in the morning, I go back 3 p.m., the chop is ready. Okay, it has basically no legal value. But they're used for, again, as a common practice. In China, completely different.
Yeah.
The company seal, which is the all-powerful, most important chop, these are registered at the police. So when they are carved at the police, and the police keeps a specimen, and when you destroy or dispose of them, because maybe you have used them for so many years, so they are worn out, you need to go to the police to dispose. You cannot just throw it in the garbage. Or you can do it, but then you're in for trouble. If I walk into a Ferrari store in Macau, in Shanghai, with the company chop of the company, and I seal the purchase contract of a car, formally speaking, that's valid. So you want to make sure that this chop and the other chop listed there as well, that you keep them in a safe and are custody, and that you need to, I would say, best practice, implement a chop register. So who used the chop, for what reason, for chopping what, and did he have the authorization of the legal rep or the other people? Because otherwise, if there is misuse here, it's trouble. In China, documents or contract are rather sealed or stamped rather than signed. Even bank documents, a bank telegraphic transfer or a check, you would use a combination of file and seal and legal rep seal rather than signatures. Because signatures, the signature is not exactly the same. Oh, we reject the payment or the bank document. We use seals on this. The same for contract and customs. So these are very important. You need to have very good procedures in place for the use to avoid the risk of fraud or any sort of legal troubles.
Yeah.
It's actually a service that we provide. And normally corporate service providers in general, we have a seal, they will offer you a sealed custody service because it's dedicated. This is a bit too technical. Anyways, I didn't talk before about company incorporation timing, lead time in Hong Kong and Macau. So in Hong Kong, if I file in the morning, in the afternoon, the company is registered. In Macau, because it's a bit longer, I would say a month after filing the application. In China, depending on the complexity of the business scope, so if it's a consulting, a trading, or a manufacturing company, we are going for a minimum of 2 months, 2 months and a half, to even 4 or 5 months. So China takes time to set up, even if it's a fast business license to obtain. The key takeaway will be this one. Similar to Hong Kong, what we need to do every year, we need to have a board meeting. Any change in terms of governance or a shareholding need to be filed. We need to file once a year what is called annual reporting. So have a general corporate update with the various authorities, and you need to file your tax filings on monthly, quarterly, or yearly basis. So not just once a year like in Macau and Hong Kong, but here you have monthly, quarterly, year, depending on what tax. And we're going to talk about that in a moment. So there's VAT in China with different tax rates. The most important are on goods, 13%, general goods, 13%, and on services, 6%. VAT has to be declared quarterly for the majority of the companies. If you have a small size status of company, declarations are not on monthly basis, but in general, it's monthly. The VAT around the mid-15 of the subsequent month, more or less. And the month when we have Chinese New Year, the deadline is the 21st, normally, not the 15th, or Golden Week in October, same. We have enterprise income tax and individual income tax. Enterprise income tax, the general rate is 25%. So comparing to what I said before, Macau, 12%, Hong Kong, 8.25, 16.5, that's the tier tax rate. China, 25%. Paid quarterly. Quarterly. Every quarter you pay, and then once a year, then you do, you draw a line, and you see if overall in the year, if you're overpaid or underpaid, and you get reimbursed the difference or pay the additional part.
So Hong Kong, Macau, it's not like that.
Well, once a year.
Right?
Once a year. Yeah. Here you pay quarterly, companies assess on every quarter, and then at the end of the year, there is one yearly final declaration that basically compensate and offset the previous one.
So is it an estimate or something?
No, if you have a good accountant, then China works on an accrual basis principle, accounting wise, just like Hong Kong and Macau. However, because in China we have FAPIAO, tax invoice, instead of pro forma invoice, you will not be able to deduct input VAT and cost if you don't have a tax FAPIAO. Because once you are issued or issue a tax FAPIAO, you need to report that income or cost into the system. So you want to make sure that you collect all the tax FAPIAO, the tax invoices, and that you issue your tax invoices through the e-FAPIAO portal of the tax authority, or if you go the old style with the specific FAPIAO printing machine within the quarter. Otherwise, you may have your cost and revenue for each quarter may not be aligned. So from a cash flow point of view, you may be suffering because maybe you have issued a lot of sales tax invoice. Your client haven't paid you. It doesn't matter. You still need to report that income and pay the VAT and pay the EAT at the end of the quarter. So you want to be very tight in controlling this part. Otherwise, again, from a cash flow point of view, you may be suffering. Enterprise income tax, as I said before, the general rate is 25%, 10% on withholding, and there are special regimes by which you have a smaller rate, but generally speaking, it's 25%. Okay. Value added, you can see the rates they mentioned before. The general one are 13 and 6%. Sometimes you have 9, which is on transportation or landlord. So when you receive your rental invoice from your landlord, it will be at 9%. You pay VAT every month, obviously on the difference between your output and input VAT. If you don't have VAT payable because you have a credit, okay, great, it stays there. And once a year, you can even ask a refund, and the authorities will pay it back to you. Export VAT refund, very nice policy for China. Let's say that your Woofy buys products in China and then sells those products overseas. Obviously, when you purchase goods from local suppliers in China, you are paying a 13% input VAT on the invoices that they give you. But when you export or sell overseas, those sales are VAT exempted. So you don't have to add 13% on your sales, for example, when your roofie sells to Hong Kong or a UK company. So how do you collect back that 13% VAT that you have paid on your local purchases? There are specific applications, which is called export VAT refund, from which the government and the custom authority will refund you the 13% that you have paid on your local purchases in the local suppliers. Now, you don't always reach full 13% refund. This depends on China. Maybe there are some category of products that they want to boost the export, incentivize the export. They will give you the full 13% refund. There are certain products or categories that they don't want you to export. They want to discourage the export of. I'll give you an example. These days, I would say coal, copper, rare earth, oil. They want wood. They want that stuff to stay in China. So you may be getting less than 13% or even zero. They want the consumption to stay in China. They don't want those goods or raw materials to leave. And you need to have, again, very tidiness in your document, because this is a very hard, heavy paperwork-based procedure. The authority will check that the paper flow is all consistent and each step is supported by document to get the VAT refund. It's okay. This is what needs to be done when remitting the funds overseas. Let me focus on the dividends. So precondition for a company, Chinese company, to pay dividends to its overseas shareholder. First one, the capital of that company has to be fully paid. China is basically telling you, you have not completed to pay the capital that you have committed to pay. Forget about paying dividends out. First, you put here all the money that you have committed, then you can pay out. Then there is a statutory reserve that you need to set aside every time you pay the dividends. You need to have paid the EIT, enterprise income tax, on that profit. So it's a net after-tax profit. And then you pay out the dividend. When you pay, before you pay it out, you have to go to your tax bureau and pay the withholding tax. 10%, pretty much, if the receiver of the dividend is in any overseas country. 5% if it's a Hong Kong recipient, provided that the Hong Kong company satisfies certain requirements. Withholding tax in China. And then if the recipients fulfill the foreign source income exemption requirements we saw before, it's a zero tax in Hong Kong. And then from Hong Kong, you send that money wherever you want, all over the world. Hong Kong will not ask for anything. Okay, and then similar treatment, you have VAT and VAT on interest or royalty fee be paying out. This VAT and interest and dividend may be reduced by China if China has a DTA with the recipient country, with Hong Kong, although we are a special administrative region of China, there is, it's what I described before. There are others with also other foreign countries, with Switzerland, with the UK, etc. China has a, I would say, quite extensive double taxation agreement network with the major economies in the world. Visa in China, very briefly to complete. An important difference that I want to mention is the business visa and the work visa. Business visa is meant for people who go on a business trip in China, basically. You go to visit your suppliers, to have business meetings, to visit clients in China, to explore the market. You go with a business visa. This is normally a 30 to 60 days long visa. It's not a visa meant for you to stably stay and work in China. If you want to move and stably work in China, you need the work visa. You apply for the work visa first. Once you have the work visa, you go out of China, you activate the visa, you go back in China, and then you obtain the work permit and the residence permit, these two things. Those are what allow you to stay, live, and work in China a long time. Dependents can be under your main visa, and so forth. The application here takes about 2 to 3 months, and sometimes you need to also have a medical report. I remember back when I was living in China in 2013, there is a special place in Shanghai, it's like a medical center for foreigners. We have to go there and do a whole application for checking your medical and health status before getting a visa. So being in good health, I would say, is one of the requirements for having to work in China. And you need to submit also criminal records, so show that you don't have a bad history in the background. Yeah, this is employment, typically 2 years. You need to pay social insurances, in China if you go there. Shanghai used to be exempted. Now it's not so much anymore. But part of this social insurance and pension fund that you pay into the China system, when you permanently leave China, you can get them back. Same is true in Hong Kong. You can get 100% back of your locally paid social insurance and pension funds. So when you leave, you get the refund. And that's it for my part. Thank you very much, everybody, for the attention, and obviously happy to take any questions from the audience.
Thank you. We have two questions. One's from Alex Olsen from Denmark, BII. A quick one, Francesco. How does licensing of IP from a European company to wholly owned Hong Kong entity work?
So if the question is, if the European entity as a licensor signs a licensing sort of agreement with the Hong Kong licensee, is that right? Is that the question?
Yeah.
Okay. So in that scenario, then I guess the Hong Kong company will be paying a licensing fee back to the European company.
Okay.
Now, if the licensing is about a trademark, Hong Kong, that's the only case where Hong Kong applies a withholding tax.
Yeah.
On the trademark licenses being paid back to the mother company in the Europe. If it's another type of trademark, patent or something like that, it's fairly easier. There is no preemptive withholding tax in this case, but there will be the need once a year to file a tax return in Hong Kong, and normally the Hong Kong licensee will file that return on behalf, because when we file the tax return of the Hong Kong company, there is a specific section on licensing. So we will disclose the details of the licensor. And then after a while, Hong Kong will issue a tax return for the licensor company. Now, typically Hong Kong, given the wide extensive network of DTAs that they have, probably that will provide for a reduced withholding tax rate. And by filing a tax residency certificate obtainable in the country where the licensor company is, UK, etc., there is the chance of having the reduced withholding tax rate in Hong Kong. Again, very flexible. You don't need to have a preemptive tax filing before paying the license fee out, whereas that is a requirement in China. So prior to paying out, you need to register the licensing agreement with the Chinese authority, just to give you a difference. In Macau, we don't have any of that. So if the licensee company is a Macau company paying the licensing fee out to Europe, there is no withholding tax applicable in Macau.
I see. Another question from Nareen Rat from TechSource, Thailand. What are the must-haves versus the nice-to-have services when supporting foreign companies or startups entering a highly complex ecosystem like China? What
must-have?
Yeah, absolutely.
So
essential.
Yeah. So essential, again, from a service provider standpoint, or actually from an entrepreneur standpoint. So if you go to China, you need to have a local provider to do your tax filings. Accounting and tax is a must. You need to do it every month, not like Hong Kong or Macau once a year. So you need to have somebody locally qualified to do it. That will be a must. Otherwise, you're in for trouble. And because a lot of the documents, there's a cultural barrier in a way, because all the official policies and these things are in Chinese. So you want somebody on the ground that speaks and knows the business culture in China. And for the accounting and tax filing, absolutely, that's a must-have. Another must-have, unless the entrepreneur sends, let's say, a manager or goes directly there to start up and initiate the business, in my point of view, would be the sales custody part. Because if you don't fully trust your local team or whoever is going to assist you on the ground yet, the door is open for big troubles in that sense. Yes. And the third thing, the bank services. Now, Chinese major banks, ICBC, Bank of China, CCB, etc., they do have internet banking platforms and these sort of things. And those are good and normally can be used also from overseas to action the payments, the local payments, the China to China payments. But if you need to make a payment to overseas, you cannot process it from the internet banking. You need to go to the bank counter, file the paperwork, and go to the IRD, not IRD, to the IRD Hong Kong, to the tax bureau to process. So there is still some physical processing at banks in China, especially when making payment in and out.
How about to Hong Kong?
Same. Still need to have somebody that goes to the bank and file papers. So having somebody that support from the banking point of view locally is a must, I would say. Even if you don't have it, you won't be able to process business. So sales, custody, accounting and tax, and banking, this will be a must, the basic
Banking.
package of assistance in general from us, or even if you don't want it from an external provider, then you need to have somebody of trust locally hired that carries it up. But this stuff, you cannot manage these things from overseas. You need to do it there on the ground. And then there's the add-ons, obviously, other type of services, payroll, these sort of things. Payroll, I would say most likely it's on the border between the must and nice have, because again, cultural barrier, filings and report and declaration to be done through the official portals online every month. You need somebody local that knows how to do it.
Okay.
Yeah,
I see. Well, I think any more questions, everybody? Well, it's 1:40 now. No. Oh, thank you, everybody, and thank you, Francesco. Thank you. So, well, there's one more, Gabriel. A local domain name is important, or .com well accepted.
Yeah, .com is accepted. Now, not really our cup of tea, but I can tell you
it's a culture thing.
Yeah. I would do it. If your target is China, I would register .cn.
.cn.
Yeah, absolutely. Also because now China, of course, great firewall of China, and the internet, the online domain business is huge there, but it's localized. So there's many social media platforms or even a browser that don't work in China. You need to be on Baidu, you need to be on the local search engine and so forth. A .cn, a must. Commercially, a must. Yeah. Even again, I'm a corporate service provider. I don't do social media marketing or these sort of things, but that much I know. Better to have a .cn. Yes.
Of course, that makes complete sense. Yeah, that makes complete sense. I guess that's what any more last call, everyone. Ask the experts, it's free. Lower. Thanks, appreciated. Thank you very much, Gabriel. Thank you, guys. Thank you, everyone. Thanks, Francesco. Thanks, Rachel. Thanks, everyone in the room as well. Okay, Renata, good luck. I met Bruno today. If you know him, right? He's the investor. Yeah.
Yes.
Yeah, I think he's going to move over as well. So anyway. Thank you, everyone. Thanks very much. And Nathaniel, thanks so much, Nathaniel. Everybody, bye-bye. And I'll see you. I'll email everybody.